Welcome. This is Talk Tickers, and today we're digging into SuRo Capital's latest earnings. And what we found was a real head-scratcher. The company reported absolutely stellar results, but the stock immediately took a nosedive. We're going to figure out exactly why that happened. Okay, so let's get right into this divergence. On one side of the tape, you have the company, with the CEO calling it a milestone quarter, the single largest jump in net asset value they've ever had. But on the other side, you have the market, which looked at that news and just slammed the sell button. That's the puzzle we're here to solve today. Here's how we're going to break it all down. First, we'll hit the headline numbers. Then we'll look at the AI windfall that drove those numbers. After that, we'll dive into the market's strange verdict and what catalysts are coming up. And finally, we'll wrap it all up with our call on the stock. All right, first up, let's just look at the raw numbers. Because from management's point of view, this quarter was an absolute home run. The big number here, the one that really matters for a company like SuRo, is its net asset value, or NAV. And I mean, it just went through the roof, up a staggering 38% in a single quarter. That massive jump took their NAV per share from $6.56 all the way up to $9.18. Just completely blew past what anyone was expecting. And what does that all add up to? Well, in just 3 months, we're talking about over $62 million in value created from their operations. I mean, that is just a huge, huge number for them. Okay, so the big question is, where did all this value come from? Well, the answer is pretty simple, and it all comes down to one dominant theme: artificial intelligence. You know, when you look at their holdings, what's really striking is how concentrated this all is. This incredible performance was basically all powered by their top AI bets. We're talking about the big names here, like CoreWeave and OpenAI. And this is exactly why the CEO, Mark Klein, sounded so triumphant on the earnings call. He made it super clear that this wasn't just luck. This was the direct payoff from their big multi-year strategy of betting on the leaders in AI. And here's the kicker. This wasn't just paper money. They were actually cashing in. They sold off a big piece of their CoreWeave stake for some serious cash, got out of another position, and then, and this is key, they turned right around and gave some of that money back to shareholders through a dividend, all while still putting new capital to work. Which brings us right back to that big puzzle we started with. The NAV is exploding, they're cashing in on their winners, they're paying dividends. So why on earth did the stock get crushed? The very next day, the stock drops over 3%. And look at that volume spike, up 42%. That is not just a little bit of selling, that's a clear signal that big players were heading for the exits. So what is the deal? What did the market see that maybe we're missing in these fantastic headline numbers? All right, there are probably a few things going on here. First, let's be real, the stock had already been on an absolute tear, up over 120% in the last year. So some profit taking, totally expected. But I think the bigger story is that the market is getting skeptical. It's asking, okay, these private AI valuations are great on paper, but how real are they? And more importantly, how fast can you actually turn that paper into cold, hard cash for us, the shareholders? And you know what? It really seems like management got that message loud and clear, because their whole strategy going forward seems designed to answer that exact question. They're shifting gears from just being a patient holder of these assets to an active harvester of their gains. So the game plan for the rest of the year is pretty straightforward. It's all about execution. We need to be watching for them to sell more CoreWeave shares as those lockups expire. We should look for them to find ways to cash out of other big private names like OpenAI. And the most important piece of the puzzle? Funneling those proceeds back into more dividends. So let's put this all together. What's our call on SuRo Capital for the next quarter? What should you be expecting? Okay, here's our take. We think the NVIDIA is going to keep creeping up, probably somewhere in that $9.50 to $10 range, just because their AI holdings are still so hot. But the stock itself, we think it's going to be stuck in a range. The market is basically in show-me mode right now. It wants proof that they can consistently turn these paper gains into real cash. Until that happens, the stock's probably not going anywhere. And for that reason, our rating is market perform. Now, for those of you with a higher risk tolerance, here's a potential trade idea. This is what's known as a relative value play. The whole idea is that SuRo gives you a way to own stakes in these top-tier private AI companies, but at a discount to their paper value. So you could go long SuRo Capital to capture that value, but hedge your bet by shorting a basket of public AI stocks that look, frankly, a little frothy and have weaker fundamentals. You're basically betting that SuRo's hard assets will hold up better than all the public market hype, especially if we see a broader sector pullback. And as always, a quick reminder, this is not financial advice. Please be sure to do your own research before making any investment decisions.